Hi students, welcome to MI Academy. And today in this video we are going to continue the grade 10 chapter 3 of the business studies, business organization. If you have not still subscribed to MI Academy, then click the subscribe button and turn on the notification bell icon to all, so that you can watch my upcoming videos without missing. What is partnership business? The relationship among individuals conducting a business in common with an objective to earn a profit is known as a partnership. The Partnership Ordinance of 1890 affects partnerships. Professions such as accountants, lawyers, tax officers, and doctors may also conduct their practice as a partnership. Example: a set of chartered accountants carrying out an audit firm. A set of engineers running business. Let's see the characteristics of partnership business for you to get a clear understanding about it. The following special characteristics can be seen in partnerships compared to other business organizations. Number of members in a partnership. There should be minimum 2 members and maximum 20 members according to the Companies Act No. 07 of 2007. Partnership Agreement. The agreement among the partners when starting the business is known as the partnership agreement. This agreement can be in written, oral. According to the Prevention of Fraud Ordinance, if the initial capital of the partnership is greater than Rs 1,000, a partnership is required to be conducted under a written agreement. This written agreement is known as partnership deed. Unlimited liability of partners. Partners are unlimitedly liable for the debts of a partnership. If the assets of the business are not sufficient to pay off its debts, partners are liable to sacrifice their private properties even to pay off debts. Not mandatory to register a partnership. If a partnership is conducted under the full names of all the partners, it is not required to register. However, if a partnership is conducted under a different name, the business name should be registered. No separate legal identity. A partnership is not considered as a legal person in front of law. Therefore, a partnership is unable to perform any legal activities in its business name. Partners are required to use their personal names in legal matters. No continued existence. The existence of a partnership will be ceased due to the death of a partner or a partner being mentally unstable, or even when bringing a new partner. Now let's see what are the advantages of partnership businesses. The partnership have following advantages compared to other business organizations. Convenient to commence. Partnership businesses are also easy to commence like sole proprietorships. The legal regulations pertaining to the commencement and conduct of partnerships are comparatively low. Can raise more capital. Since a partnership consists of 2 or more members, they can raise more capital compared to a sole proprietorship. Can utilize different skills of partners. As various individuals involved in a partnership, special skills of them can be utilized. Shared liability among partners. The liabilities arising from operations of a partnership will be shared among all the partners in the business. Can take collective decisions. More accurate decisions can be taken in a partnership by considering the views of all the partners collectively. Now let's see what are the disadvantages of partnership businesses. Unlimited liability. Partners in a partnership are also unlimitedly liable regarding the debts of the business. Therefore, when the debts of the business are more than the capital partners have provided, they are liable to sacrifice their personal properties to pay off that debt. Profits shared among partners. Even though the owner of a sole proprietorship enjoys all the profits earned, in a partnership, the profits earned are shared among the partners. Conflicts among partners. Conflicts could arise among the partners of a partnership due to certain decisions taken when conducting the business. These conflicts will cause a business to become a failure. No continued existence. A partnership may be dissolved due to the death of a partner or a partner being mentally unstable. No legal personality. Since a partnership is not accepted as a legal person in front of law, the partners are required to use their own personal names in all legal activities of the partnership. I hope you have understood. Business is registered under the Companies Act number 07 of 2007, is an incorporated company. The owners of these companies are the shareholders. Their liability is limited to the amount they have paid or liable to pay for the shares they have purchased. Let's see some of the examples of the incorporated companies. Google, Microsoft, Apple Inc. are some of largest incorporated companies in the world. Here public can buy shares in these companies, so that the companies can raise more capital. Let's look at the characteristics of incorporated companies for better understanding. Can raise capital by issuing shares. As I said, an incorporated company can raise capital by issuing shares to the public. Incorporation under the Companies Act. In order to commence an incorporated company, it is required to be incorporated under the Companies Act number 07 of 2007. You will study about how to register in your upper grades. Okay then. Limited liability. Shareholders have a limited liability with regard to the debt and other liabilities of a company. The liability of shareholders is limited to the value of the shares they have purchased. So, they are not required to sacrifice their private properties like in sole proprietorships and partnerships. Legal personality. A company is considered as a legal person in the presence of law. Therefore, a company can enter into contracts, can appoint agents, can acquire assets and can pay taxes etc. in its name. Continued existence. Since a company is considered as a separate legal entity from its owners, the death of shareholders or shareholders being bankrupt shall not affect to the continued existence of its business activities. Now let's see what are the advantages of incorporated companies. Can raise more capital. A higher level of capital can be raised by issuing shares. Due to the higher recognition of the incorporated companies, it is easy to raise funds by obtaining loans from external parties as well. Receiving legal personality. A company is considered as a legal person in the presence of law. Therefore, a company can enter into contracts, can appoint agents, can acquire assets and can pay taxes etc. in its name. Continued existence. The continued existence of a company will not be disrupted by the death of its shareholders or due to bankruptcy. Therefore, a company can conduct their operations continuously. Limited liability. The liability of shareholders of an incorporated company are limited to the amount of capital they have invested in the company. Managed by a board of directors. The business activities of a company are managed by a board of directors selected and appointed by the shareholders of a company. Now let's see what are the disadvantages of incorporated companies. Greater level of legal provisions. Since the legal provisions relevant for starting a company, conducting operations, and winding up of a company are comparatively higher. Conducting a limited company is more complex compared to other forms of business organizations. Profits and ownership are shared. In the case of an incorporated company that has a large number of shareholders, the ownership and profits are shared among them. What is a cooperative society? A cooperative society is a non-profit organization. It is controlled by a group of individuals voluntarily and enjoy a collective ownership. A cooperative society can be started with at least 10 members and the capital is mainly provided by the membership subscriptions. In addition, cooperative societies are required to be registered under the Cooperative Societies Act No. 5 of 1972. Examples of some cooperative societies are Sri Lanka Multi-Purpose Cooperative Societies, Sri Lanka Coconut Producers Cooperative Society, Thrift and Credit Cooperative Societies. Now let's look at the characteristics of cooperative societies. Democratic control. Democratic control means the cooperative society is controlled by a board of directors elected by its members and the decisions are taken based on the consent of the majority of members. Voluntary and open membership. Any individual can obtain membership and any member can withdraw from the membership voluntarily. Collective ownership of members. A cooperative society is owned by its members and all its assets are also owned by all the members. Common expectations and needs. The main objective of a cooperative society is to achieve the well-being of its members and facilitate development of society. Okay, now let's see what are the advantages of cooperative societies. Democratic control is an advantage. Board of directors can be elected and decisions will be taken based on the consent of the majority of members. Acting for the well-being of members. Since cooperative societies are established with common goals, it will carry out its operations emphasizing the social responsibility and equity to all. Government provides various incentives for conducting cooperative societies. Shared economic benefits. Excess profit earned through the business activities of a cooperative society will be distributed among the members in different forms. Okay, then what are the disadvantages of cooperative societies? Limited capital. Since the capital is raised only by the membership subscriptions of members, the amount of capital that can be collected is limited. Should adhere only to the stipulated cooperative policies. This type of business organizations are based on cooperative policies. It is not possible to change the business operations in order to face competitive business environment, since it is required to adhere to these policies. We have done with cooperative societies. Next is association, which is similar to cooperative societies. Associations are organizations with the objective of social well-being. These associations are established especially in order to achieve well-being of the members, to accomplish a community service or a charitable activity. Look, it's same as the cooperative societies. Examples of associations are sports clubs, farmers associations. Their characteristics, advantages, disadvantages are same as cooperative societies. Okay, then I hope you have understood up to now. If not, please ask your doubts in the comments. What is known as state corporations? Businesses owned by the government are known as state corporations. A state corporation is controlled by a board of directors appointed by the government. These businesses will be commenced under a general or special act of the Parliament. These are also known as state corporations, commissions, authorities, boards and bureaus. Examples are Sri Lanka Rupa Vahini Corporation, Sri Lanka Ports Authority, Sri Lanka Bureau of Foreign Employment, Export Insurance Board. And then let's look at their characteristics. Government ownership and control. The full or majority of ownership and control is vested with the government. In some instances, the private sector also hold a minority of shares. Objective is providing services. Most of the state corporations are aimed at providing services in common to the general public. Having legal personality. In legal activities, a state corporation has a separate legal identity. can commence either under a special act or a general existing act. Continued existence. Since state corporations are established under an act of Parliament, they have a continued existence. Alright, now let's look at the advantages of state corporations. Appropriate for the provision of essential services. State corporations are suitable to provide essential services, which may not be provided by the private sector to the general public. To reduce the monopoly effects of private sector. State corporations can be used to create a competitive environment to reduce unfavorable influences arising through private sector monopolies. Example: Sri Lanka Transport Board. Profits owned by the public. A portion of the profits earned by a state corporation will be credited to the consolidated fund of the government. And some of the disadvantages of state corporations are: absence of independence in decision-making. State corporations need to adhere to financial regulations of the government. That's all about state corporations, and if you have any doubts about state corporations you can mention in the comments. First, let's see what is meant by departments. The state departments are institutions governed by the government under a ministry. Departments are operated in order to provide various services to the general public. Examples: Railway Department, Postal Department. Let's see the characteristics of state departments. The first one is: departments are owned and controlled by the government under a ministry. Departments are fully owned by the government and directly governed by the Parliament and the respective ministry. The management and administration is done through the heads of departments. In legal activities, the head of the department should represent the department using his designation. Continued existence. The existence of a department depends on the discretion of the government. Funded by the government. The required funds will be allocated by the annual budget of the government. Now let's move on to the advantages of state departments. The departments provide essential services to the public. The departments will handle long-term development activities which require a larger amount of funds. A large number of employees are working in departments. This provides more employment opportunities. The departments provide services for the well-being of the general public without a profit motive. The disadvantages of departments. The decision-making will be delayed due to the approval required from the Parliament and the respective ministry. The departments have to conduct activities according to the provisions in government financial regulations, establishment code, and different circulars. And that's all we have in departments. Now guys, we have studied all the business organizations in our list. And in Chapter 3, we have only to cover the selecting appropriate business organization and registering the sole proprietorship business. So we will be covering them in our next video. If you have any questions or doubts, please mention in the comments.